carefully because what I'm about to tell you is going to change the way you think about your money, your portfolio, and your financial future. I'm Kevin O'Leary, and I don't waste your time with garbage. I deal in facts, I deal in numbers, and I deal in making money. And right now, there is an opportunity staring us in the face that most people are completely ignoring. We're talking about gold. Now, before you roll your eyes and think this is some boring conversation about a shiny rock, let me stop you right there. Gold is about to surge like we have never seen before in our lifetimes. And if you're not paying attention, you're going to miss one of the greatest wealth preservation and wealth creation opportunities of this decade. But before I tell you exactly why this is happening and what you need to do about it right now, I need something from you. If you want to protect your money, if you want to grow your wealth, you need to subscribe to this channel. Hit that button. Become part of this community. We're building an army of smart investors who understand that knowledge is power and money loves speed. So subscribe, hit the notification bell, and let's get into this together. Now, let me tell you something about myself. I've been investing for decades. I've built companies, I've sold companies, I've made fortunes, and yes, I've lost money too. That's how you learn. I sit on Shark Tank and I see thousands of pitches. I know what works and what doesn't. And one thing I've learned over all these years is this: when the fundamentals line up, when the economic indicators start flashing red, when governments start doing stupid things with money, that's when you need to pay attention. And right now, every single alarm bell is ringing. The fundamentals for gold are stronger than they have been in 50 years. Let me break this down for you in a way that even a child could understand. Gold is not just a piece of jewelry. Gold is not just something your grandmother kept in a safe. Gold is money. It's been money for 5,000 years. When empires fall, gold survives. When currencies collapse, gold survives. When banks fail, gold survives. It is the ultimate store of value. And right now, the world is waking up to this reality all over again. Here's what's happening. We are living through the biggest monetary experiment in human history. Governments around the world have printed more money in the last few years than in the entire history of civilization combined. Think about that. More dollars, more euros, more yen created out of thin air than ever before. And what happens when you flood the market with anything? The value goes down. It's basic supply and demand. When there are too many dollars chasing too few goods, each dollar becomes worth less. That's called inflation. And inflation is a silent thief that steals your wealth while you sleep. Now, central banks will tell you they have it under control. They'll tell you inflation is transitory, that it's manageable, that they're going to fix it. But let me tell you something about central bankers. They're not your friends. They're not looking out for you. They're trying to save a system that is broken. They're trying to keep the plate spinning for as long as possible. But the music is going to stop. And when it does, the people who are holding paper currencies are going to get crushed. The people who are holding real assets like gold are going to be just fine. Let me give you some numbers because I'm all about the numbers. Right now, gold is hovering around $2,000 an ounce. Some people look at that price and think it's expensive. They think they missed the boat. But let me tell you, we are just getting started. When you adjust for inflation, when you look at the real purchasing power of gold compared to what it was decades ago, gold is actually cheap. In fact, if gold were to reach the same inflation-adjusted high it hit back in the early 80s, we'd be looking at over $3,000 an ounce. And I believe we're going higher than that, much higher. Why? Because the conditions today are far worse than they were back then. Back then, we had one country printing money. Now we have every major economy doing it at the same time. Back then, debt levels were manageable. Now governments are drowning in debt. The United States alone has over $30 trillion in debt. That number is so big, most people can't even comprehend it. And it's growing every single day. How do you pay back that kind of debt? You don't. You inflate it away. You print more money and you destroy the value of your currency. And that, my friends, is exactly what is happening right now. Now, I want to talk about something that nobody else is talking about. I want to talk about trust. Money only works if people trust it. The dollar is the reserve currency of the world because people trust it. But that trust is eroding. Countries around the world are starting to ask themselves, why are we holding all these dollars? Why are we funding America's deficit? Why are we letting them print money and export their inflation to us? And they're starting to do something about it. Central banks around the world are buying gold at a record pace. China is buying gold, Russia is buying gold, India is buying gold. Even small countries that you've never heard of are stockpiling gold because they know what's coming. When central banks are buying, you should be paying attention. These are the people who have access to information that you and I don't have. They see the writing on the wall. They know the dollar's days as the dominant reserve currency are numbered, and they're preparing for what comes next. If you're not doing the same, you're making a massive mistake. Let me tell you a story. I was having lunch with a very wealthy friend of mine, a billionaire, someone who has made his fortune in real estate and private equity. And I asked him, "What are you worried about? What keeps you up at night?" And he looked at me and said, "Kevin, I'm worried about my cash. I'm worried that the money I've worked my entire life to accumulate is going to be worth nothing." So you know what he's doing? He's converting a significant portion of his liquid wealth into gold, not because he thinks he's going to make a quick buck, but because he wants to preserve what he's built. That's the mindset of the truly wealthy. They think about protection first, growth second. Now, I know what some of you are thinking. You're thinking, "Kevin, gold doesn't pay dividends. It doesn't generate cash flow. Why would I invest in something that just sits there?" And that's a fair question. But let me ask you this. What good is a dividend if the currency it's paid in is collapsing? What good is cash flow if your purchasing power is being destroyed? Gold is insurance. It's a hedge against chaos. And right now, chaos is what we're looking at. Think about what happened during the financial crisis. Stocks crashed. Real estate crashed. People lost their jobs, their homes, their savings. But gold went up. It protected the people who owned it. It did its job. And we're heading into another crisis. This one is going to be different. It's going to be bigger. It's going to involve currencies, not just stocks and bonds. And when that happens, gold is going to be the only thing standing between you and financial ruin. But here's the thing. You can't wait until the crisis hits to buy gold. By then, it's too late. The price will have already skyrocketed. You need to position yourself now while most people are still asleep, while they're still trusting the system, while they're still believing the lies that everything is fine. This is your moment. This is your opportunity to get ahead of the curve. I want to talk about something else that's driving gold higher, and that's geopolitical instability. The world is more dangerous today than it has been in a very long time. We have conflicts brewing in multiple regions. We have tensions between major powers. We have supply chains that are fragile. We have energy crises. All of this creates uncertainty. And when there's uncertainty, investors flee to safety. And the safest asset in the world is gold. Every time there's a major geopolitical event, gold spikes. Every time there's a war, a crisis, a breakdown in diplomacy, people run to gold. And right now we're living in a world where the next major event could happen at any moment. You need to be prepared. You need to have gold in your portfolio before that happens, not after. Now let me get into the specifics of what's happening in the market right now, because this is where it gets really interesting. I'm going to share with you some information that Wall Street doesn't want you to know. They want you invested in their products, in their funds, in their stocks, because that's how they make their fees. But I'm going to tell you the truth because that's what I do. The supply and demand dynamics for gold are completely out of whack. On the supply side, we're running into serious problems. Gold mining is not easy. It takes years to develop a new mine. It costs billions of dollars, and the easy gold has already been found. We're not discovering major new gold deposits like we used to. The mines that are operating are getting deeper, more expensive, and less productive. What does that mean? It means supply is constrained, and it's going to stay constrained. Meanwhile, demand is exploding. I already told you about central banks buying record amounts. But it's not just central banks. You've got retail investors all over the world, especially in Asia, buying physical gold. In countries like India and China, gold is part of the culture. It's how people save. It's how they store wealth. And as these economies grow and their middle classes expand, the demand for gold is only going to increase. You've got hundreds of millions of people entering the middle class in Asia, and they're all going to want gold. Then you've got the institutional investors, the big money, the hedge funds, the family offices, the pension funds. For years, they stayed away from gold because stocks were going up. Why bother with gold when you can make 20% a year in the stock market? But that party is over. The stock market is overvalued. The returns are going to be mediocre at best going forward. And these institutional players are looking for alternatives. They're looking for assets that are uncorrelated to stocks and bonds. And that's gold. Here's something most people don't understand. The gold market is actually quite small compared to other markets. The entire above-ground supply of gold in the world is worth around $12 trillion. That sounds like a lot, but compare that to the stock market, which is worth over $100 trillion, or real estate, which is worth even more. Gold is tiny, and when big money starts flowing into a small market, the price goes up fast, very fast. Let me give you an example. If just 1% of global stock market money decided to move into gold, we're talking about over $1 trillion flowing into a $12 trillion market. That's an 8% increase in demand. What do you think that does to the price? It sends it to the moon, and I believe that's exactly what's going to happen. As more and more investors wake up to the risks in the financial system, as they realize their stocks and bonds are at risk, they're going to rotate into gold. And when they do, we're going to see a price surge that will shock everyone. Now, let me address something that the gold haters always bring up. They say, Kevin, gold had a terrible decade. From 2011 to 2020, gold went nowhere. It was dead money. Why would I invest in something that can go sideways for 10 years? And you know what? They're right. Gold did go sideways. But do you know why? Because during that period, we had artificially low interest rates, and we had central banks telling everyone that everything was fine. People believed the lie. They stayed in stocks. They stayed in bonds. But now the lie is exposed. The emperor has no clothes, and gold is waking up. Since 2020, gold has been in a new bull market. It's been making higher highs and higher lows. It's broken out of its decade-long consolidation. And this is just the beginning. We're in the early innings of what I believe will be a 10 to 15-year bull market in gold. And the people who get in early are going to make fortunes. The people who wait are going to chase it higher and higher. Let me talk about how you should actually invest in gold, because this is important. There are several ways to get exposure, and not all of them are created equal. The first way is physical gold. You can buy coins, you can buy bars, and you store them yourself or in a vault. This is the purest form of gold ownership. Nobody can take it away from you. It's not a promise from a bank or a government. It's real, tangible wealth. I own physical gold. I recommend everyone own at least some physical gold. But there are downsides. Storage can be a hassle. Security is a concern. And when you want to sell, you have to find a buyer and deal with the logistics. The second way is through gold exchange traded funds. These are funds that hold physical gold, and you can buy shares just like you buy a stock. It's liquid, it's easy, and you don't have to worry about storage. The downside is you don't actually own the gold. You own a share of a fund that owns gold. In a real crisis, if the system breaks down, you might have trouble getting your hands on the actual metal. But for most people, for most situations, an exchange-traded fund is a great way to get exposure. The third way is through gold mining stocks. This is where you can potentially make the biggest returns, but also where you take on the most risk. When the price of gold goes up, mining companies make more profit, and their stock prices tend to go up even more than the price of gold itself. It's leverage. If gold goes up 50%, a good mining stock might go up 100% or more. But the opposite is also true. If gold goes down, mining stocks get crushed. And mining companies have their own risks. They have operational issues, management issues, geopolitical risks if they're operating in unstable countries. So you need to be selective. You need to pick the best companies with the best management and the best assets. I have a diversified approach. I own physical gold for insurance. I own exchange-traded funds for liquidity, and I own select mining stocks for upside. That's how you play this opportunity correctly. You don't put all your eggs in one basket, but you make sure gold is a meaningful part of your portfolio. Now, how much should you allocate to gold? That depends on your situation, your risk tolerance, and your view of the world. But I'll tell you this, I think every investor should have at least 10% of their portfolio in gold and gold-related assets. If you're more concerned about the financial system, if you think things are going to get really bad, you could go up to 20 or even 30%. But you need to have some. 0% is not an option anymore. The risks are too high. Let me tell you what the smart money is doing. They're not waiting for confirmation. They're not waiting for gold to hit $3,000 or $4,000 before they buy. They're buying now. They're accumulating positions quietly while the price is still reasonable. And when the herd finally wakes up and starts stampeding into gold, they'll already be sitting on massive gains. That's how wealth is built. You get in early, you have patience, and you let the market come to you. I want to talk about something else that's going to drive gold higher, and that's the death of the 60-40 portfolio. For decades, financial advisors told their clients to put 60% in stocks and 40% in bonds. It was the classic balanced portfolio. And it worked because stocks and bonds were negatively correlated. When stocks went down, bonds went up and vice versa. But that relationship has broken down. Now, stocks and bonds are moving together. When inflation is high, both stocks and bonds can go down at the same time. We saw this recently. Portfolios got destroyed because there was nowhere to hide. Gold is the solution. Gold is the asset that actually diversifies a portfolio. It moves independently of stocks and bonds. It protects you when everything else is falling apart. And as more financial advisors and institutions realize this, they're going to start adding gold to their models. Instead of 60-40, it's going to be 50-30-20. 50% stocks, 30% bonds, 20% gold and alternatives. And when that shift happens, when trillions of dollars of institutional money starts allocating to gold, the price is going to explode. Here's another thing that people don't talk about. Governments are trapped. They're trapped by their own debt. They can't raise interest rates too high because they can't afford the interest payments on their debt. And they can't cut spending because that would cause a recession and they'd lose votes. So what are they going to do? They're going to keep printing money. They're going to keep inflating. They have no other choice. It's the only way out of the debt trap. And as long as they keep printing, gold is going to keep going up. Look at what happened in other countries that went down this path. Look at Venezuela, look at Zimbabwe, look at Argentina. When governments destroy their currencies, gold becomes the only thing that holds value. Now, I'm not saying America is going to become Venezuela, but I am saying the direction we're headed is not good. And you need to protect yourself. You need to own assets that can't be printed, that can't be inflated away, and that's gold. Let me tell you about opportunity cost, because this is something investors need to think about. Every dollar you have sitting in cash is losing value. Every single day, inflation is eating away at your purchasing power. Even if it's in a savings account earning 1 or 2%, you're losing money in real terms because inflation is running much higher than that. The government says inflation is 3 or 4%, but anyone who actually buys groceries or pays rent knows it's much higher. Your cash is melting like an ice cube in the sun. So the question becomes, where do you want your money? Do you want it sitting in a bank account getting destroyed by inflation, or do you want it in an asset that has preserved wealth for 5,000 years? The answer should be obvious. And this is why I'm telling you, the opportunity cost of not owning gold right now is enormous. You're not just missing out on potential gains, you're actively losing money by staying in cash. Now let me talk about the psychology of this market, because understanding human behavior is critical to making money. Right now, most investors are suffering from what I call recency bias. They remember that gold did nothing for 10 years. They remember that stocks went up and up and up, so they think that's going to continue. But markets don't work that way. Markets move in cycles. We had a decade-long cycle where paper assets were king. Now we're entering a cycle where hard assets, real assets, tangible assets are going to be king, and gold is the king of hard assets. The people who make the most money in markets are the ones who see the cycle change before everyone else. They're the ones who have the courage to go against the crowd. Right now, the crowd is still in stocks. They're still trusting the system. They're still believing that everything is going to be fine. But the smart money, the people who have been through multiple cycles, they're quietly moving into gold. And when the crowd finally realizes what's happening, when they panic and rush for the exits, it will be too late. The price will already be sky high. I've been investing long enough to know that the best opportunities are the ones that feel uncomfortable. When everyone agrees with you, when everyone is doing the same thing, that's when you need to be worried. That's when you're probably late to the party. But when people are skeptical, when they're dismissive, when they think you're crazy, that's often when you're early. And right now, if you tell most people to buy gold, they'll look at you like you're wearing a tinfoil hat. That tells me we're still early. That tells me there's still time to get positioned before the real move happens. Let me share something with you that I find absolutely fascinating. Do you know how much gold the average American owns? Almost none. The average portfolio has zero exposure to gold. Zero. People have their entire net worth tied up in stocks, bonds, real estate, and cash. They have no protection. They have no insurance. And when things go wrong, and they will go wrong, these people are going to be in serious trouble. Don't be one of them. Don't be the person who looks back and says, I should have listened. I should have bought gold when I had the chance. Now, I want to address the elephant in the room. Some people say, Kevin, if things get really bad, if the system collapses, gold won't matter. You'll need food and water and weapons, not shiny metal. And you know what? If we get to that point, they're right. But let me tell you something. We're not going to get to that point. The system is not going to completely collapse. What's going to happen is a reset. A painful, ugly reset where currencies lose value, where debt gets restructured, where there's a lot of financial pain. But civilization is not going to end. And in that environment, gold is going to be the asset that preserves your wealth and allows you to come out the other side intact. Throughout history, every time there's been a monetary reset, the people who owned gold came out ahead. They were able to buy assets at bargain prices while everyone else was broke. They were able to rebuild their wealth quickly. Gold is not about preparing for the end of the world. It's about preparing for the end of this particular financial system and the beginning of the next one. And that transition is going to create enormous opportunities for the people who are positioned correctly. Let me tell you what I see happening over the next few years. I see gold breaking through $3,000 an ounce, then $4,000, then $5,000. I see a scenario where gold could even hit $10,000 an ounce if things get really out of control. Now, some people will say that's crazy, that's impossible. But let me remind you, people said the same thing when gold was at $300, and I said it would hit $1,000. They laughed, and then it happened. They said the same thing when it was at 1,000 and people predicted 2,000, and that happened too. The people who understand monetary history, who understand what happens when governments print money recklessly, they know that there's no ceiling on the price of gold. It can go as high as it needs to go. And here's the beautiful thing about gold. It's not about timing the perfect entry point. It's not about trying to catch the absolute bottom. It's about having exposure. If you buy gold today and it goes down 10% before it goes up, who cares? In the long run, you're going to be fine. But if you wait, if you try to be too clever, you might miss the move entirely. And that's a mistake you'll regret for the rest of your life. I want to talk about legacy for a moment because this is something that's important to me. I've built wealth, I've created businesses, I've made money, but I also think about protecting that wealth for my family, for the next generation. And gold is a key part of that strategy. Gold is the asset that you can pass down to your children and grandchildren knowing that it will still have value. You can't say that about cash, you can't say that about bonds, but you can say that about gold. It's been valuable for 5,000 years and it will be valuable for the next 5,000 years. If you care about your family's financial future, if you want to leave them something of real value, you need to own gold. You need to teach them about gold. You need to help them understand that real wealth is not about how many dollars you have in a bank account. Real wealth is about owning things that cannot be created out of thin air. And gold is the ultimate example of that. Now, let me give you some practical advice because I know some of you are sitting there thinking, okay, Kevin, you've convinced me. I want to buy gold. What do I do? First, do your research. Understand what you're buying. If you're buying physical gold, deal with reputable dealers. Don't get ripped off. If you're buying an exchange-traded fund, make sure it actually holds physical gold and not just derivatives or paper promises. If you're buying mining stocks, look at the balance sheet, look at the management team, look at the assets. Don't just buy any gold stock because it has the word gold in the name. Second, start small if you need to. You don't have to go all in on day one. Buy a little bit, get comfortable with it, see how it feels, and then add to your position over time. This is called dollar cost averaging, and it's a smart way to build a position without taking too much risk all at once. Third, be patient. This is not a get-rich-quick scheme. This is a long-term wealth preservation and wealth building strategy. You might have to wait months or even years before you see the big payoff, but when it comes, and it will come, you'll be glad you had the patience to stay the course. Fourth, don't tell everyone what you're doing. Keep your gold holdings private. Don't brag about it. Don't post about it on social media. The fewer people who know you own gold, the better. This is about protecting yourself, not about showing off. And finally, once you own gold, don't panic sell at the first sign of trouble. Gold can be volatile. It can go down 20 or 30% in a short period of time. That's normal. That's part of the process. If you believe in the long-term thesis, if you understand why you own it, then you need to have the discipline to hold through the volatility. The people who make money in gold are the ones who buy and hold. The people who lose money are the ones who panic and sell at the bottom. Let me wrap this up by saying something very clearly. We are living through a historic moment. We are living through a time that people will study in economics textbooks for the next 100 years. They will look back and ask, How did governments get away with printing so much money? How did people not see what was coming? And the answer is some people did see it. Some people understood what was happening and positioned themselves accordingly. And those people preserved their wealth and came out ahead. I want you to be one of those people. I don't care if you're rich or poor, young or old, experienced or just starting out. Everyone needs to own gold. It's not optional anymore. The risks in the financial system are too great. The likelihood of currency debasement is too high. The potential for a major crisis is too real. You need protection. You need insurance. And gold is the best insurance policy you can buy. Now, I need you to do something for me right now. If you found this information valuable, if you understand the urgency of what I'm telling you, I need you to smash that like button. I need you to share this video with your friends and family. They need to hear this message. And I need you to subscribe to this channel if you haven't already. But don't just subscribe. Hit the notification bell so you get alerted every time I post a new video. Because I'm going to keep bringing you this kind of content. I'm going to keep telling you the truth about what's happening in the markets and what you need to do to protect yourself. And if you really want to take your investing to the next level, consider becoming a member of this channel. When you become a member, you get access to exclusive content, you get early access to videos, and you become part of a community of serious investors who are all working toward the same goal, building and protecting wealth. Your membership supports this channel and allows me to keep creating content without worrying about pleasing advertisers or sponsors. I answer to you, not to them. Listen, I've been doing this for a long time. I've seen bull markets and bear markets.